So in this session, we will learn one or two more strategies. Basically, we already know one thing, that suppose any level, that level breakout. So after any breakout, market create two situations we already know. One is market retest that level and goes up, and another, market may create retracement candlesticks after breakout. These two situations we already know. So retracement candlestick, after retracement candlesticks, market again goes up. These two situations we already know after any breakout. So based on this concept, we have a strong strategy, and we will add this strategy with others strategy for best confirmation, so that we can easily place any sure shot trade. Okay. So first of all, we have to understand the market structure and market condition. So which market condition we must choose for this strategy. So we can call this one psychological strategy, or we can call this one retracement candle strategy, or we will use any a trend line. That's why we can also call this one trend line strategy. So anyone we can call, but we have to add all the concept in one frame, so that we can easily understand what will be the condition, what will be the next candlestick. So for that, first of all, we can start from a basement. So basement, that means which market basement. So when market sideways, side by side, so there are two types of this type of sideways market condition. It's a one, sometimes it's a good market condition, and sometimes it's a bad market condition. Although it's a range, sometimes it will give us good situation, sometimes it will give us bad situation. Bad, that means volatility high, each and every candlestick's movement so fast. That's why we must avoid that type of situation. But suppose the total market condition, this one, there is no respect by the buyers and sellers side. Always breakout, always breakout. So that time, we must avoid this area. But suddenly, if we think that market respecting one areas, that is, it may a buyer's area, and suddenly the movement is very fast, we can take this situation, because there are two conditions here. Number one, basement we already got, that is a triple bottom pattern. Triple bottom. After this, that momentum and momentum breaking all the previous resistance level, very aggressively it's going up. That's why we can easily take this condition. So this is one scenario. And another scenario, basically the second scenario is very perfect, but we will not get each and every time that type of scenario. That's why we have to search for this type of situations also. Suppose volatility, it's okay, but suddenly market, suppose news released in the market, news finished, then market already created a very, very perfect movement. And in that area, here to here, there is no volatile situation. Each and every candlesticks, medium-sized candlesticks, that is a very, very perfect situation for profitable trading. But we will not get this type of situation each and every time. Sometimes volatile, then suddenly like this type of. But second situation, we always try to hunt a New York session. That means in India time, evening time by India. Okay. So that time what happened? Maximum market condition, trendy situation. Suppose previously there was a trend. Okay, I'm drawing by red. Downtrend market, trendy market. But always we will not get this type of situation. But we always try to hunt this type of situation. So now market started from here. Maybe there is a range or there is a extreme seller entry point area. Then market finally strongly falling down, and the movement is very fast by the seller side. And these are the pullback. Okay. Then market come to any area. Maybe it's a round number level, or maybe it's a strong area by the buyer side. Extreme buyer's entry point area. So when it's the extreme buyer's entry point area, and already market created several waves to the same direction, and we will get some confirmation from this area, or maybe from this area also. Last one waves or last two waves also. So if last wave, what symptoms we will find out? We must find out two situations. That is weak candlestick Suppose it's a weak candlesticks like this, like this, like this, suddenly strong. Weak candlesticks suddenly strong. And this type of rejection. So that is one types of confirmation that yes, market may reverse from that area. So left side good. And these are the confirmations. There are several confirmations. After creating several waves to the same direction, when market come to any strong buyer's entry point area, buyers entered in the market. And sellers, after weakness by the seller side and this type of exhaustion candle, hit the buyer's entry point area, strong buyer's entry point area, buyers will enter. So that's the situation we have to find out from the market. If we observe that left side good and market create that type of situation, now we can wait for little range or a little a good basement. That is a chart pattern. It made a double bottom, triple bottom, inverted head and shoulder pattern, low, high, higher, low, higher, high. Any patterns we can expect. Okay. So suppose market created here. Okay, I'm drawing here. Slowly, buyers try to enter in the market. Sellers again come because there is a force. That's why it's not possible each and every time that market will directly create here a momentum. Sometimes it may create, but most of the time it will not create because there is a force. There is a down movement here. That's why sellers again try to enter in the market. So if the situation like that, so now it's a double bottom pattern. Market may create triple bottom also. Double bottom pattern, neckline breakout, and then market going up. Okay, fine. This basement setup or this market structure setup is not only for this strategy. It's for each and every time. for profitable trading, you must find out a good market condition first. This is first priority. Then only any strategy we can apply that only give us sure shot. Basement setup and market condition, market structure. So market condition good, left side, it was good market, trendy market. And there is no news here. It's an every candlesticks, medium body candlesticks. There are no much volatility in the market. And after creating several waves to the same direction, market already hit strong buyers area. After that, after creating basement, market going up. That's the very, very perfect situation. Okay. Then market try to create one or two waves. If we see that there is a several waves like 1, 2, 3, 4, 5 waves here left side, so we can expect minimum 3, 4 waves in the right side also, because left side good, again it will give us another good situation on the right side also. So now already we got basement and then market going up. So now again market start going up like this. So this is a good condition of the market. So now we can come to our strategy setup. So what strategy? After breakout, when market create two situations. After breakout, market retest and directly goes up, or market may create retracement candlesticks. That's the main logic, main thing here. So here if we observe, this is bullish engulfing pattern. This is another bullish engulfing pattern. So two bullish engulfing patterns already formed here. So when two bullish engulfing pattern already formed, after bullish engulfing pattern, so what we already know, after any bullish engulfing pattern or after any pattern, we must find out the key level. So what's the bullish engulfing pattern's key level? This is the bullish engulfing pattern's key level. So this bullish candlesticks already broke the bearish candlesticks opening price. This is also breakout. So after this breakout, market may create two situations. One is market may retest that level and goes up, or market may create a retracement candlesticks. After that, market may goes up. Retracement candlesticks, after that market may goes up. So what scenario we observing here? So that's the first scenario. So it's a bullish engulfing pattern. After that, next candlestick goes up. Again, bullish engulfing pattern. After that, no retracement candlesticks here. Next candlestick goes up. So when market create that type of situation, now when each and everything we must observe. What's the previous market condition? I am telling about only the sure shot, not only the strategy. So if you want to apply these strategies and everywhere, it will not give us a good result. But when we observe each and everything, then only we can take from this strategy only sure shot. So no. Now what happened here? It's a bullish engulfing pattern. Next candlestick goes up. Bullish engulfing pattern. Next candlestick goes up. So when we got two situations, bullish engulfing here, bullish engulfing here. So now the question is, only bullish engulfing pattern applicable for here? No. Any bullish pattern. Any bullish pattern. It may piercing pattern. Here piercing pattern. Here bullish engulfing pattern, here bullish engulfing pattern, here piercing pattern, or here outside bar pattern, here bullish engulfing pattern. So we have to combine each and everything, then only it will very clear to us. So now what we have to observe from here, we have to observe, so where is the support point here and here? So this is support point, and this is another support point. So we can apply this strategy. Basically, the strategy here, we have to take from this bullish candlestick's lower point, and then this is the setup, drawing setup. That means this line must touch both two candlesticks, this candlestick's body, this candlestick's body also. Or if the wicks like this bearish candlestick wicks and this bullish candlestick wicks, then we can take from here also. This. Because these candlesticks wicks touch this level, and this candlestick wicks and body also touch this level. Touch is must. That means both two candlesticks touch the level. This is one scenario, and another scenario you can take also. Two lines you can take for your best setup like this. So first drawing is from the bottom, that means from wicks, from first bullish engulfing patterns wicks, lower low. So it's a lower low. If this candlestick wicks more low, then you have to take from here. That means lower low you have to take. So now between these two candlesticks is a lower low, lowest position. Then you can draw like this and touch. When both candlesticks touches this line, by this way you have to draw first line. And second line you can draw as you draw the normal support, trend line support level. Body, bullish candlestick's body to bullish candlestick's body. So now we already got two lines here. This is one line. This is another line. Two lines we already get. Okay, fine. Now what happened? You have to observe then another reversal. That means when market, suppose market again goes up, okay, fine. After sometimes, if sellers again entered in the market, okay, any types of sellers, it may weak bearish candlesticks, it may Marubozu candlesticks, or any types of candlesticks market create here. So after creating these candlesticks, you must observe the reason why these sellers come in the market. There are different reasons. Suppose previously there was a resistance level here, okay, little above here. That resistance level already broke by these bullish candlesticks. That's why these candlesticks come in the market as a retracement candle. That is very, very perfect situation. Now it's a support by horizontal line, as well as this support by trend line, this support by trend line. So these candlesticks fail to break three support points. So if market create that type of situation based on level trading, okay, try to follow one thing. In previous drawing, I drawn from here, but in this drawing, this is not lower low. This is the lower low. That's why we have to take from this point. Now we can take from this point because this is lower low. And tosses from both two candlesticks, that is this one and this one. Okay. Then another support level, we can draw body to body like this. So both two lines we have to draw for our best understanding. So now market going up. So if any breakout and then sellers entered in the market, that is very perfect for us because we already know how we can place a trade by drawing any level. So definitely when market come below the any level, this level, this level, this level, then we place our trade as below as it possible to up direction. That is level. Our previous class topics was this one, level trading. So now after this situation, this is bullish engulfing pattern. Not only bullish engulfing pattern, we have to take any double candlestick pattern, not triple, not morning star. So double candlestick pattern means piercing line pattern, means outside bar pattern, means bullish harami pattern, any bullish pattern, but no retracement. That means second candlesticks we have to find out that where is the second candlestick. This is second candlesticks. Okay, second candlesticks red or green. Yes, it's a green. Then it's a perfect. It's our strategy setup. Second candlesticks red or green. Yes, green. It's a strategy setup. Now, if market give us this opportunity that after breakout, market create a bearish candlesticks, and this bearish candlesticks, why these bearish candlesticks come in the market? Because of retracement candlesticks. Then easily we can place a trade here to up direction. But if we see there is a extreme sellers entry point area and these sellers already come in the market, then we must wait for one candle because it's a strong sellers entry point area. Maybe next candlestick little jump down, and now this level will act as a resistance level, rejection, and the market may fall down. So that's why before placing any trade, we have to find out the reason why these sellers come in the market. So when these sellers come in the market, it's okay. There is another reason because of this level breakout, it come, then we can place a trade to up direction. Okay, suppose we place a trade to up direction and this is our winning trade. And again, these candlesticks come in the market, any bullish pattern set up here, it may piercing line pattern, it may bullish engulfing pattern, it may outside bar pattern, it may bullish harami pattern, any bullish double candlestick pattern formed. Now, here market goes up and here market directly goes up, no retracement. So for the third time, we can trust this setup that market will not give us any retracement candlesticks here. So this is our key level. When market come little below, then only we place our trade to up direction. So sometimes what happen if we immediately place our trade, because someone can think that, okay, this is our confirmation that next candlestick goes up, immediately we can place our trade here to up direction. No, it's little risky. Why? Sometimes market may create doji candlesticks also here. That time it may loss or it may no profit, no loss. But we will not take that type of risk. Just we have to wait little. Then when market little come below this level, basically this support level, trendline support level, or this level, then we can place a trade to direction of the trend. Definitely it's a sheer shot. But we must observe each and every situations of the market. So what's the previous market condition? Is there any basement here or not? After basement, market is volatile or not? If market creating one candlestick is very small candlestick, another candlestick is very large candlestick, no, not like that type of situation. So now each and every candlestick is medium size candlesticks, then only we can use this setup as a sheer shot. Definitely we have to draw two lines for our best understanding. So sometimes why we can draw why we have to draw two lines? Because sometimes market may create little long size candlesticks. Suppose I'm drawing here, I'm clearing each and everything here because this strategy very important strategy. And previously I explained this strategy, but not like this elaborately, just shortly, but it's a very refined explanation, very perfect explanation. Suppose there was a resistance level here, okay, fine, resistance level, that resistance level already break out. Already broke. Okay, now we can think that if we don't draw this type of level, now we can think that market will goes down, but there is another two support level here. So now this one can break, this first one, then we have another support level here in our hand, that is this one. So maybe after breakout of this first support level, market may reverse from second one. That's why all these levels we have to follow, we have to draw. Okay, so in the case of like this type of, we can easily trade here or here below the level to up direction. Sometimes market may create this size candlesticks also. It already broke this support level, but it failed to break this support level. That's the point. After that, if buyers entered in the market like this, so now we can easily apply this strategy, not only this one, engulfing, piercing also. So we can easily place a trade below the level to the upward direction. So another thing we have to follow here also, that is, first one is retracement candlestick rules, that already cleared. Then this is the support, two support point we have to draw, that also clear. And for each and every strategy setup or each and every trading strategy, we can just follow this type of market structure and market condition. That is also clear. Now, another thing here, that is the psychological movement. So what's the psychological movement? We already know what's the psychology. Psychology, that means any situation that happen again and again in the market, that is the market psychology. That means market is moving by following that psychology only. That psychology running. So what's psychology here? Suppose previous candlesticks are bullish candlesticks. After bullish candlesticks, after this movement, only one bearish candlesticks, then market goes up. Only one bearish candlestick, then market goes up. Only one bearish candlesticks, already it broke the support level here, the previous support level here, and then already it broke the this first support level here. But after breakout of this level, it not goes down, it will again goes up because of the psychological movement running here. After one bearish candlestick, market going up. After one bearish candlestick, market going up. After one bearish candlesticks, it will not goes down. Although breakout, it will goes up. But we must follow one thing here, that is, what's the reason why these sellers come in the market? It's extreme seller sentiment here or not. If it's the extreme seller sentiment area, then leave it. If there is no extreme seller sentiment area, then just you can again place a trade here, because on one support breakout, another support breakout, but third support in our hand, and it already closed above the support point. Psychological movement, that's how you can place a trade in this candlestick here to up direction. So that psychological movement also perfect for us for placing this trade. Okay, now second trade, this is also another psychological movement here running. What psychological movement? This is bullish engulfing pattern. Then next candlestick goes up. This is another bullish engulfing pattern. Then next candlestick goes up. This is a piercing line pattern. So three patterns already formed here. So first two patterns give us the bullish candlesticks after pattern, not any retracement candlestick, not any retracement candlesticks. So not any, these two retracement candlesticks. Now we can't expect that market will give us a retracement candlesticks. We can expect now it will go up. Why? Because of psychological movement running also here. So first psychological movement, one candlestick, then market goes up, one candlestick, market goes up, one candlestick, market will goes up. Okay, fine. This is winning trade. Now another psychological movement, the pattern, no retracement. Pattern, no retracement. Now pattern, we can expect next candlestick goes up. It will not give us retracement. Just we have to follow the key level. Before placing our trade, we must follow the key level. So that's the setup for it today. So if you have any question, then ask me.
Yes, yes. Like let us say here it has formed a retracement candle, but it actually respected the key level. Can you
Okay.
see my drawing, bro?
Yes, yes.
Ah. But actually it respected the key level. Like let us say a small
Yes, yes, I
uh,
understand. Then
any
send, then tell second one.
but after that the second candle is green. But here it didn't form any retracement candle and directly went up, respecting the key level.
Yes.
That time also from key level can we take the trade, bro?
So if you follow the strategy, that strategy is a psychological movement strategy, then you have to leave it because that is not respecting. But if you follow only the candlestick pattern, okay, only if you want to combine all the things in one frame, then you have to leave it. But if you are not thinking this one, this one, this one, but you are thinking that respected the key level, okay, fine. There is a retracement candlestick, so I can only place my trade based on this piercing line pattern. Here is my key level. When market come below my key level, then I can place my trade here to up direction because everything is okay. The trendy market, then it's a strong trend and a strong momentum previously. There is no extreme sellers entry point area, so I have a pattern here. Now I can apply the pattern trading strategy. But
Yes,
if
one
you if you
yes,
want to combine all the things for sure shot only, that will give you confidence. I think you
got
understand.
it, got it, got it, got it,
Okay,
got it.
so you
And one
have,
more,
yes, yes, tell me.
like let us say you said that from here it was downtrend. Like let us say this created the last low. This point created the last low, and from here it created a change of character, like this way. And after that it created first higher low. So can't we take from this point the trend line?
Yes, you can
Because
take, because you can take the
it was
trend line here because yes, I understand your point that this is a support point and a higher
yes,
low already created. But if the previous
yes, yes,
market condition downtrend market, then you can take a support point here. It's perfect. You
yes,
can
yes.
take.
Got it, got it, got it.
So you have another question from previous class.
Yes, yes, bro. We were talking about extreme levels, but the main I have the question is that what should we consider? Should we consider the area, or should we consider the level, or should we consider the order block, or should we consider the fair value gap? What should we consider as extreme
Yes, yes.
point, bro?
Yes, I understand your question. So try to understand the if the range, if the range, it's a range. So how you consider? You have to consider first, you have to draw one level. From any point, you have to draw one level. And that level respecting how much point? That is very important. Based on this sideways market. And suppose you are considering this one. So you can just count from below in a ranging market, minimum 20 candlesticks left or 25 candlesticks or maximum 30 candlesticks. Within that range, how many levels you find? That's the point. By that way, you have to draw. And another situation, when market trendy, there is a point. So is it an extreme seller's entry point area or not? How you learn, how you understand? You have to check the previous history because it's a trendy market. So maybe 1 hour previous, there is this type of a reversal. Then you have to draw, you have to take, definitely it's an extreme seller's entry point area because so many reversal. And it already created first, second, third, fourth wave. That's why more possibility market may reverse from here.